Hi there, and Finance Focus, a platform where we engage in conversation that endeavor to enhance our financial literacy. And welcome about today's live session. And in this particular live, we are just going to analyze or discuss the treasury bonds that have been floated for the month of September 2025. So anything that you start before you dive investing into this in this particular session. So in case you have any question, drop them in the chat and I will address them as we proceed with the with the session. Be sure that you get to learn a lot from this particular session. So hang around, get to learn. In case you have any question, be sure that I'll be able to address them as we get to progress. Those are the three bonds that have been reopened. I hope you can be able to see my screen. I hope you can be able to see my screen. In this country of ours, Kenya, you will barely go a week without coming across someone who is talking about the national debt. So anytime you come across someone talking about the national debt, it tells you that the national debt can be divided into two groups. That is the foreign debt and the domestic debt. Now, in this session, we are not talking about the foreign debt. Our main interest is the domestic debt. And when it comes to the domestic debt, the government borrows money majorly to discuss in this particular session. And number two is the treasury bills. So the difference between the two, both of them belong to the same family of government securities. But the difference between the two, that is the treasury bills and the treasury bond, is that treasury bonds are long term and treasury bills are short term. So in this particular session, we are going to discuss treasury bonds, which are long term, and we'll be able to see that in a few minutes. So when we are talking about treasury bonds, we are simply talking about loans advanced by the members of the public, to the government of Kenya. So the citizens are lending money to the government. So that is the most simple description that I can give for treasury bonds. So we are talking about citizens lending money to the government. Now, it has been a norm that we are almost having treasury bonds being floated each and every other each and every other month. We have deals each and every other month. So, and the month of September is not an exception because we are already done with the deals for the month of October. So we are now dealing with the deals for the month of we are done with the deals for the month of August, where the auction was quite exciting because we had some two infrastructure bonds, and immediately that auction was closed, the Central Bank of Kenya floated three treasury bonds that are now on offer for the month of September. So that is exactly what we are going to discuss in this particular session. So let's get to diving into the particular bonds so that we get to understand. So before you make an investment decision, it's important to understand what you are signing up for so that you don't end up messing your cash flows, so that you don't end up messing your investment goals. Now, prospectus for the reopened 2025 and 30 years fixed coupon a long period of time. So it clarifies the fact that we are talking about long-term engagements. We are talking about long-term debts. Now, invites bids for the above bonds whose terms and conditions are as follows. You see, these are the terms and conditions of the bond. When we are discussing these prospectus, we are trying to without reading, but that is a very dangerous move when it comes to investment. Whenever you are making an investment decision or an investment move, never make that mistake of skipping the terms and conditions. And the Central Bank of Kenya has told you clearly that these are the terms and conditions of the kind of investments that we are talking about. Now, let's start with the very first bond, stroke 2018 stroke 020. Now, there are three things that you can get to learn from the title of that particular bond. Three lessons. Even before we go into any other thing, you can learn three things out of that title, or you can get three facts out of that title. FXD1 tells you that that bond is a taxable bond. We majorly have two categories of bonds, that is the taxable and the tax-free. The FXD1 tells you that clearly this bond is subject to tax. So any interest that you earn from this bond will be subject to a withholding tax of a percentage that you will see shortly. Stroke 2018 tells us that this particular bond was issued in the year 2018. So it is not a new bond, but rather it is a reopening. Stroke 020 tells that this bond had a tenor of 20 years at the point of issuing. Now, the tenor of the bond is 12.5 years. Why is this tenor of the bond 12 and a half years? And we have just said that the tenor was 20 years when it was issued. The bond was issued in 2018 and we are in 2025. It means out of the 20 years that was the original tenor of the bond, around 7.5 years has elapsed, and that is why the remaining period is 12 and a half years. So when we are talking about this particular bond, we are talking about an investment of around 12 and a half years. It is very important to understand what you are signing up for. You are signing up for an investment of it means that you are fixing your money for a period of 12 and a half years. So it is a long term investment. And I believe that you have your personal financial goals, and it is very important to match your personal financial goals to the investment projects that you take. So don't take money that is meant for a short term use and fix them in a bond that will last for the next 12 and a half years. That is why it is very important to understand the maturity of the bond. It is not cast on stone that the moment you buy this bond, that you have to hold it for the next 12 and a half years, because you can sell the bond in the secondary market. But remember that depends on whether you'll find a buyer who is willing to buy this particular bond. Again, you can discount the bond at the Central Bank of Kenya, but that comes at a cost. So try as much as you can to match your investment goals to the kind of investments that you take, so that you don't get to a place where you find yourself you want to rediscount your bond, and the cost of rediscounting that bond might be too high. You end up losing in this kind of investment. So it is important to note that bonds are long term, so don't put money intended for short term use into this kind of investment. Now, let's talk about the coupon rate. The coupon rate for this particular bond is 13.2%. And the coupon rate is simply the return on investment. It is the money that you make from lending money to the government through this particular issue. Now, is 13.2% a good deal at this point in time? I would say it is a good deal. For someone who is seeking to invest in government securities, that is a low risk invest securities, can only be clearly given by the treasury bills. And last week we saw the 91-day treasury bill interest rate dropping below 8% to 7.99%. So if you are to invest in government securities in the prevailing rate, you will be talking about a rate of 7.99%. So getting an offer of 13.2%, I would say that it is quite a good deal. So if you want to invest in government securities, 13.2% might be better than going for um, a treasury bill that is below 8%. But again, there are other many factors that you need to consider. Now, withholding tax, we said that this bond is subject to tax, And you can see that the withholding tax is set at 10%. So from the interest that you earn, 10% does not belong to you, but rather it belongs to the government, and you will have to surrender that automatically as taxes. Let's talk about the maturity dates. The maturity dates of this particular bond is at the 1st of March 2038. So, and this is the day that you get your money back from the Central Bank of Kenya. So be aware that you are surrendering money right now, and you'll get that money back on the 1st of March 2038. The period of sale of this particular bond is from the 26th of August when it was floated until the 17th of September 2025. Right now, we are on the 31st of August 2025. So we still have around 3 weeks for you to get information that you need before deciding, make a decision, and place your bid. The bid submission deadline is on 17th of September 2025 by 10 a.m. So if you are interested in investing in this particular bond, you ought to have placed your bid by the 17th of September 2025 by 10 a.m. The settlement date is the day you now seal the deal with the Central Bank of Kenya, and it is set at 22nd of September 2025. The amount that is needed by this particular bond is is 40 billion. The government intends to borrow 40 billion through this particular paper, and the purpose of borrowing is that we always budget for money that we don't have. So the minimum amount that you need to bid, if you are doing an uncompetitive bid, that would be 50,000, and if you are doing a competitive bid, the minimum amount that you need is uh, is 2 million. So that is it. So non-competitive bidding is a kind of bidding where you tell the Central Bank of Kenya, I'm comfortable with any yield that you give me, because Bank of Kenya that mi niko tu sawa na the yield that you get to decide, I'm okay with it. That is non-competitive bidding. But when we talk about competitive bidding, we are talking about scenarios where those guys who are bidding for amounts that are bigger than 2 million, that is 2 million and above, you have the chance of dictating the market yield, your desired market yield that you would want from the government of Kenya. And remember that when it comes to treasury bills, treasury bonds, the market yield and the price of the bond has an inverse relationship. That is, the higher the market yield, the lower the price of the bond. So when you are bidding competitively, you will tend to quote a higher yield so that you pay a lesser price for the bond. But we saw in the August 2025 auction that the Central Bank of Kenya rejected almost all the competitive bids. Maybe the investors had quoted so high yields that they wanted to pay extremely lower prices, and the Central Bank of Kenya was not prepared for that. It was not prepared for such kind of expensive loans. So it is very important for you to consider the market yield that you are placing if you are considering doing a competitive bid, and be aware that it is not guaranteed that your competitive bid will be accepted. It might be out of the market yield cutoff that will be determined after the auction. So if you want to bid competitively, be very keen on the kind of yield that you quote for these particular bids, because the Central Bank of Kenya seems to be very keen to acquire as cheapest loans as they can. Now, let's dive into the second bond and get to see the features of this particular bond. I'm now on the FXD1 stroke 2022 stroke 025. Again, it is a bond that is taxable that was issued in 2022, and the original tenor for this particular bond was 25 years. Now, the tenor that is remaining to maturity is 22.2 years, simply because it was issued in 2022. We are in 2025, so two and some months have passed. So the remaining tenor to maturity is 22.2 years. So we are talking quite a long term investment, because 22.2 years is not a short time. Someone who is not yet born uh, will be born, will get an ID, will be eligible for voting by the time this paper gets to mature. So it is not quite a short time. So be very keen when you are placing your bid. Ensure that you understand what you are signing up for. Understand what it means by a maturity period of 22 and a half years. Get to understand what you are signing up for. Now, let's go on. The coupon rate is quite attractive. This is the bond with the best coupon rate among the three bonds that have been floated in this particular auction. 14 and a half years, 14.188% is the coupon rate. And the coupon rate, we say it is the return that you get from a bond. So those who get to invest in this particular bond, they get a return of 14.188%. Again, the withholding tax is at 10%, similar to the other two bonds. And the maturity date is at 23rd of September 2047. So we are talking about you giving the government money today and getting back that money uh, on the 23rd of September 2047. It's quite a long period. So make an informed decision. Make a very informed decision so that you don't end up using money that you are to use to pay your kids' school fees next year or next term, and come fix it in this particular bond. You'll have missed your cash flows, and you'll have missed your other investment or financial goals. The period of sale is the same as the other bond we have just discussed. It is from the 26th of August when it was floated to the 17th of September 2025. Then you ought to have submitted your bid by the 17th of September 2025 by 10 a.m. And it is good to mention that all these things nowadays are done digitally. There is no manual process that is involved. You can do anything, everything on the DAO CSD app. All you need is to get to download the DAO CSD app, or just get to the internet and get DAO CSD portal. You can be able to open an account, place your bid. Everything is done digitally. You don't have to visit the Central Bank of Kenya. You don't have to make any physical movement for you to invest in treasury bonds. Everything is being done online nowadays. Now, the settlement date of this particular bond is on 22nd of September 2025, and we say the settlement date is the day you ought to have sent your money to the Central Bank of Kenya. You see, the bids will close on the 17th, and the settlement date is at 22nd. So that period between 17th and 22nd, there are quite a number of activities that gets to happen. The auction is closed. That is, the bidding is stopped. Uh, the market yield is determined, hence the price of the bonds are determined. Then you will be told between that period whether your bid is successful or not. And if successful, it is between the same period that you'll be given something that we call a payment key. So a payment key is, I think, an 8-digit code, such kama ile tu ya M-Pesa. So it is that code that will go with it to your commercial bank and request them to assist you transfer money to the Central Bank of Kenya. And remember to code that payment key. It is very important because bid that you are settling, I'm sending money for this particular bid that is identified by that particular payment key. So do not do an RTGS to the Central Bank of Kenya without quoting the payment key, and insist that your bank should use the payment key when making your payment so that you don't have issues that your money maybe did not get to the Central Bank of Kenya. So it is very important also to check the bank through which you are sending the money. We have banks that have quite some reliable systems when it comes to payment for the government securities. We won't mention them here because we are not here to advertise them, but ensure that your commercial bank is fit for the job. Otherwise, you'll bid, your bid will be successful, but your commercial bank might end up disappointing you by not being able to send your money to the Central Bank of Kenya on time. Now, again, the amount that is being sorted by this particular bond is again 40 billion. The government intends to borrow 40 billion through this bid. And the minimum amount that you need is, as for every other bond, the minimum amount is 50,000, and any additional amount that you need to bid must be a multiple of 50,000. It means that you cannot just invest 70,000 in treasury bonds because it's either 50,000, 100,000, 150,000. That is what we mean by multiple of 50,000. Now, that is it for the second bond. Though we are not done, there are some features that we also need to look. But so far, we have covered the first two bonds that have been floated by the Central Bank of Kenya. In case you have any question about these bonds or any other question about treasury bonds in general, drop it in the comment section, and I'll address it as we move on. I also request that you continue subscribing to the channel so that you get notified anytime we have these sessions or anytime we upload a new financial tip. We upload videos, ought not to miss such kind of information. So subscribe to the channel, turn on the notification bell so that you get to be notified anytime we get to post a new financial tip. So subscribe, and I'm sure you'll get a lot of beneficial information from this particular channel. Now let's move to the third treasury bond that is on offer for September 2025, and that is the SDB1 stroke 2011 stroke 030. Again, we can get to learn three things from this particular title. SDB1, SDB means Special Development Bond. It's just a normal bond, and it is taxable. That is the key thing that you should get from that first part of the title. Stroke 2011, it means that it is a bond that was issued in 2011, and stroke 030 means that it is a bond that was issued for a tenure of 30 years, but now the remaining tenure is around 15 and a half years, simply because uh, we are in 2025. It means that 14 and a half years have elapsed. So the remaining tenor is around 15 and a half years. So we are talking about an investment that will last for the next 15 and a half years. So it is quite important that you understand what you are signing up for so that you don't fix yourself and end up messing your cash flows. Now, the coupon rate, this is the bond with the lowest coupon rate among the three bonds that have been floated because it has a coupon rate of 12%. And we say that this is the actual return that you get from this particular bond. So 12%, it is the lowest among the three that have been floated. And I believe that will contributing in making it quite less attractive. The maturity date is at 21st of January 2041. So you are giving your money to the Central Bank of Kenya only to get it on the 21st of January 2041. At the period of sale, that is it has a very short period of sale. I don't know the logic behind that, or maybe it is because it is sought to attract to collect less amount than the other bonds that are collecting 40 billion. This is collecting 20 billion. The period of sale was between 26th of August 2025 when it was floated, all the way to the 3rd of September 2025. So if you are interested in this particular bond, you ought to have submitted your bid by the 3rd of September 2025 by 10 a.m. The amount that it is sought to correct is 20 billion. The purpose is the same: budgetary support. The minimum amount that you need for you to place a bid is, as usual, competitively 2 million, and uncompetitively 50,000. And any additional amount has to be a multiple of 50,000. So those are the key features of the bonds that have been floated by the Central Bank of Kenya for the September 2025 auction. That is the kind of information that you need to know. You should never, and I repeat, never invest in something that you don't understand. It might be an investment, but you might end up messing yourself. So it is very important to get the features, to get the terms and conditions for whatever thing that you are signing up for. I believe I have discussed the features, and in case there is a sure that we will be able to address it. Now, there are some other terms and conditions that through them. Now, there's from the Central Bank of Kenya DAO CSD Investor Portal. Uh, Friday on the Friday, 5th September 2025. That is for the SDB1 stroke 2011 stroke 030 and FXD1 2018 stroke 020 for the FXD1 2022 stroke 025. Now, Friday, September 19th, 2025. Central Bank of Kenya, it's check. They will send you an email and they will also send you a text message giving you the payment key and the exact amount that you should pay to them. Now, one of the mistakes that you are likely to make in this scenario, round off or round up the amount, that is wrong. So if you are told to pay 101,506 and 55 cents, don't pay 60 cents. Ensure that you pay the exact amount, which is 55 cents. Don't round up or don't round down. So defaulters may be suspended from subsequent investment in government securities. The DAO CSD portal is not a place where you go bidding when you are bored, even if you don't have the money to invest. If you place 3 bids, they are successful and you don't set the money, you'll be blocked or you'll be suspended from placing other bids, and you will be required, not you might, you will be required to write a letter to the Central Bank of Kenya explaining why you behaved the way you behaved, so you can be unsuspended and allowed to participate in the auctions again. The Central Bank of Kenya reserves the right to accept application in full or part, therefore, or reject them in total without giving any reason. Now, the Central Bank of Kenya is a dictator. They can just reject your bond for whatever reason that they have, and you don't have the right to question them. They are not obligated to explain to you why they rejected your bid. So be prepared that, especially those who are doing competitive bids, the Central Bank of Kenya reserves the right to reject that particular bond. There is nothing you can do about it, and there is no question that you can ask about it. Now, secondary trading. Secondary trading in multiple of 50,000 commence on Monday, 8th September 2025 for the SDB1 stroke 2011 stroke 030 and 22nd September for the two other bonds. Now, it's important to note that as far as the Central Bank of Kenya floats bonds every month, once every month, bonds are traded on a daily basis in the Nairobi Securities Exchange. You can be able to buy a bond any day, anytime. But the thing is that you have to go through a broker. You cannot do it through the Central Bank of Kenya. So, but you can buy the bonds any day in the secondary market. The only difference is that you only have to go through a broker. Then rediscounting. Uh, Rediscounting is trying to get back your money before the maturity date. And the central bank is very clear. The central bank will rediscount bonds as a last resort. If you don't have any other option at 3% above the prevailing market yield or coupon rate, whichever is higher, upon receiving written instructions from investors via email rediscounting at centralbank.go.ke. Now, it is important to match your investment goals to the kind of investments that you are taking, because you see, rediscounting bonds comes at a cost. We know that the market yield and the price of the bond has an inverse relationship. So when the Central Bank of Kenya tells you that they will rediscount your bond at 3% above the prevailing market yield, like the prevailing market yield dictates the price that you could sell that bond at in the secondary market. But now, the Central Bank of Kenya will punish you by adding a 3%. Remember, adding a 3% in the market yield reduces the price of the bond drastically. So you might end up selling, you invested 100,000 and you end up receiving back maybe 90,000. So that is what it means. So the discounting treasury bonds comes at a cost. So it is very important. It is very important to understand what you are signing up for, so that you don't invest today and you need your money tomorrow. You go for rediscounting and you end up making a loss. Now, reopening the bonds may be reopened at a future date. So this is not the end. If need be, these particular bonds might be reopened in future. Now, before we conclude this session, there are some two things that I need us to check to check on. And number one being that I really need to share so that we can be on the same page. So I hope you can. Now, this is the next thing that I want us to touch on before we conclude, and it is about pricing. Now, when it comes to reopened bonds, pricing is quite simple. I want to buy bonds worth 100,000. That is what I said to the Central Bank of Kenya. But when it comes to reopening, the story is quite different. It is quite interesting, because the price of the bond will be determined by the market yield. The market yield will be determined by the auction. So it is at the end of the auction that we should be able to understand at what price will we pay for the bids for the bonds that we want to buy. Good interest. Unfortunately, I explain it better if I'm displaying somewhere, so I might not be able to reopen the treasury bonds, and you can see the concept of accrued interest. But these bonds attract an accrued interest of 0.9231 Kenya shillings 100, withholding tax computed on clean price. So, example, if quoted yield is 12%, dirty price is the clean price plus the accrued interest. So what are the main point that you should get from this pricing is that you might end up buying this bond at par, that is at 100, above par, which is called a premium, or below par, which is called a discount, where you get to pay less money. So, but all that will only be delayed until the auction is over for you to know the amount that you'll have to pay for that particular bond. In that particular angle, at a point where we sign up for things that we don't really have a very clear picture. The final thing that here, I hope you can see, this is the coupon payment page. This is the page that indicates when the coupons for these particular bonds will be paid. Now, you see, uh, the bonds pays coupon twice in every year. So the interest that you are entitled to for that particular year, it is split into two. So you can see for the first bond, it pays coupon in the month of February and in the month of August. The other bond pays coupons in the month of September and the month of March, and the third bond pays coupons in the month of October and the month of April. The other quite interesting fact that you should realize is that coupon is paid on some predetermined date. The Central Bank of Kenya will not wake up and determine that do we pay coupons or we just fail to pay. There is a predetermined date when every coupon should be paid. So it will not be BK governor is feeding on that particular day. It is not date. Now that is it that that is all that you need to understand about the September 2025 Treasury Bonds auction. I have done videos explaining the more of the features for each and every bond in a separate video. You can check up on them, and you can check the channel for more and more information about treasury bonds and other kind of passive income. Otherwise, if you still have any questions about these bonds, drop it in the comment section. Be sure that notified anytime we get to post a new financial tip. We share the kind of information that you don't want today to miss. So ensure that you subscribe to the channel so that you get notified anytime we post a new financial tip. Otherwise, till next time,